I welcome you all for this session. Today I am going to talk about the topic REIT, Real Estate Investment Trust, understanding the next wave of real estate in India. Real Estate Investment Trust is a company that owns, operates, or finances income generating real estates after mutual funds or REITs pool the capital of numerous investors. This makes it possible for individual investors to earn dividend from a real estate investment without having to buy, manage, or finance any properties themselves. REITs generate steady income stream for investors and also offer little in the way of capital appreciation. Most REITs are publicly traded like stocks, which make them highly liquid, unlike a physical real estate investment. REITs invest in most real estate property types like apartment buildings, all towers, data centers, hotels, medical facilities, offices, retail centers, and warehouses. Real estate investment trust in India. In India, the concept of real estate investment trust is relatively new, and the first guidelines were introduced by SEBI, that is Security Exchange Board of India, in the year 2007. The current SEBI guidelines related to REIT in India were approved in the year 2014 September. REITs available for investment in India. There are three REITs available for investment in India: Embassy Office Park REIT, Mindspace Business Park REIT, Brookfield India Real Estate Trust. Going forward, other leading names in the real estate sector like DLF and Godrej are also expected to introduce REITs. Structure of REITs. In India, three-tier structure: sponsor, manager, trustee. Sponsor. This is usually a real estate company that owned the assets prior to the creation of the REIT. The sponsor is responsible for setting up of the REIT and appointing the trustee. Manager, second one. The REIT manager is typically a company that specializes in facilities management, responsible for managing the assets of the REIT, making investment decisions, and ensuring timely reporting as well as disclosure by the REIT. Third, trustee. Those chosen to be a REIT trustee are typically companies that specialize in providing trusteeship services. The trustee is responsible for holding the assets of the REIT in a trusteeship for the benefit of the unit holders. Additional key SEBI mandated criteria that REITs in India need to fulfill. At least 80% of investment made by REIT need to be in commercial properties that can be rented out to generate income. At least 90% of rental income earned by the REIT has to be distributed to its unit holders as dividends or interest. Stock market listing of REIT is mandatory. Why are REITs created? It is clear that REITs allow investors to invest in and profit from commercial real estate, which is not otherwise easily accessible to small retail investors. But here are also a few benefits of real estate companies that form a REIT. In India too, REITs get a few key tax exemptions that are not available to other types of real estate companies: interest payments and dividends received by a REIT from a special purpose vehicle or SPV are exempt from tax. How do REITs generate returns for investors? Investors can receive periodic dividends or interest from REITs, and also there is a chance for capital appreciation in REITs. Dividend and interest payout. How to find out the dividend and interest payout in REITs are gross rental income of the asset real estate minus maintenance expenses of the asset. We can get the net rental income. That income among the total income, 90% of the net rental income is received by REIT. This must be paid out as dividend and interest to the investors. Second, capital gain. REITs are listed and traded on stock exchanges. So the price of individual unit changes depending upon their performance as well as market demands. And limitations of investing in REITs. Benefits. There are 5 benefits here. Diversification, small initial investment, professional management, regular income generation, capital gains. Diversification. REITs allow you to diversify your investment portfolio through exposure to real estate without the hassle related to owning and managing commercial property. This diversification allows you to go beyond the usual asset classes of equity, debt, and gold as part of your overall small initial investment. As mentioned earlier, one of the key problems associated with making real estate investment is the large ticket size, especially in the case of commercial properties. REITs require a much smaller initial investment of around Rs 50,000 to provide similar portfolio diversification benefits. Third one is professional management. Properties owned by a REIT are managed professionally. This ensures smooth operation with no effort on your part toward managing commercial real estate. Next one, regular income generation. REITs generate income from rental collections and are required to mandatorily distribute 90% of this income to investors as dividends and interest payments. In this way, REITs provide regular income to investors. Last one, capital gains. REITs are listed and traded on stock markets, and their price depends on their performance. A REIT that performs well can thus potentially increase in value over time and be sold at a profit. This provides capital gains to the investor. There are also a few limitations of REIT that you should be aware of. That is limited options, low liquidity, taxable dividend. Limited options. Currently, there are only 3 REITs and one international REIT fund in India. This significantly limits the choice of investors. Then low liquidity. While REITs are listed and traded in stock markets, the number of market participants is currently low, especially with respect to retail investors. As a result, selling REIT investment profitably might be challenged, especially in an emergency situation. This results in a low liquidity of the investment. Taxable dividend. Any dividend or interest earned from REIT is completely taxable in the hands of investor according to the applicable slab rate. Thus, those in the 30% slab will lose a substantial portion of the dividend income as taxes. How to invest in REITs? The simplest approach to invest in REIT is to buy units on the stock market because they are listed and traded on stock exchange just like exchange traded funds. As a result, in order to invest in REITs in India, Demat account is needed. Similar to exchange traded funds, the prices of REITs units fluctuates in stock market based on both unit demand and REIT performance. At present, you have 3 options. Already we know that Embassy Office Park, Mindspace or Business Park, and Brookfield India Real Estate Trust. Apart from stock market purchases, you can also invest in REIT through mutual funds. Currently, Kotak International REIT fund is the only in India that invests exclusively in international REITs. A few domestic mutual funds have also started investing in REITs in the past few years. However, the actual exposure of these schemes to this real estate investment is quite limited. Thus, the only way to gain meaningful exposure to real estate is currently through the purchase of REIT units on the stock market. Now that you have an idea regarding the key features, benefits, and limitations, and how you can invest in REITs, should you invest in REITs? Thank you.